Welcome to Investing Path, where we navigate the unpredictable tides of the financial world together. If you're watching this, you've already taken a crucial step towards safeguarding your financial future. Before we dive in, let's ponder a question. What do the tumultuous 70s, the dot-com bubble, and the recent global pandemic have in common? They were all precursors to economic downturns that tested the resilience of investors worldwide. Now, as we stand on the precipice of 2023, similar winds of change are brewing, hinting at the arrival of a sizable recession. So, let's explore this together and arm ourselves with the wisdom to not only endure, but thrive during these challenging times. Charlie Munger, the venerable vice chairman of Berkshire Hathaway, is a titan of investment wisdom who's weathered countless financial storms. His insights have never been more relevant than they are today, with the specter of inflation looming large and the Federal Reserve's interest rate hikes sending ripples through the markets. His voice resonates with the experience of someone who's witnessed the full spectrum of economic climates, from the Great Depression to the recent global upheavals. Now let's turn our attention to the environment of rising interest rates. It's a force that unequivocally casts a shadow over the stock market, but remember, 0% interest rates weren't sustainable indefinitely. We must, as Munger suggests, adapt to these financial headwinds. They're an inherent part of the investment landscape, an undulating tide of challenges and opportunities. He contends that inflation, an ever-present specter in democratic politics, will likely persist and even escalate over the coming century. This foresight is precisely why the likes of The Daily Journal have shifted their focus from bonds to equities, a move reflective of Munger's pragmatic approach to investing. In a recent conversation at the Daily Journal shareholders meeting, Munger's stance on macroeconomic factors like inflation was abundantly clear. While the trajectory of these forces is unpredictable, their impacts are not. The Federal Reserve, despite its direct influence over interest rates, often misses the mark with its forecasts. That's why Munger, instead of fixating on the erratic nature of short-term economic fluctuations, champions a long-term perspective in investment decisions. Now, if you're finding this exploration of economic resilience intriguing, remember to subscribe to Investing Path. We're here to be your compass in the financial wilderness, offering insights and strategies to secure and grow your investments. Let's continue our journey together. During economic downturns, it's the investors with the fortitude to practice delayed gratification who often emerge stronger. The current landscape is a reminder of the wisdom in extending your investment horizon and shifting the focus from immediate gains to long-term prosperity. It's not the alluring short-term plays that will fortify your portfolio, but rather the unwavering commitment to solid, long-term investments, understanding that patience today can yield a sweeter reward tomorrow. However, it's not just about patience. Rationality plays a pivotal role in navigating the markets successfully. Rational thinking, combined with an ability to think independently of the frenzied media narratives, will be your ally against the pervasive fear and uncertainty that often dominate recessionary periods. Before we continue, let's address a harsh reality of the business world, as illuminated by Munger, the impermanence of companies. The rise and fall of industry titans like Kodak and Xerox teach us a valuable lesson. No eminence is eternal. This brings us to the concept of economic moats. Companies with substantial competitive advantages are the bedrock during economic upheavals. Their ability to raise prices, maintain customer loyalty, and generate sustainable profits make them beacons of stability when the economic seas are stormy. As we prepare to navigate through potential recessions, it's critical to recognize that even the strongest moats may eventually be breached. Innovation, adaptation, and a keen eye for emerging trends are essential for long-term investment success. Let's dissect the intricacies of diversification, a principle Munger himself respects, though with a twist. Traditional wisdom suggests spreading your investments across various assets to mitigate risk. However, Munger, along with his longtime compatriot Warren Buffett, advocates for a concentrated portfolio of high-quality stocks. Why? Because when you've done your homework and invested in a company with a durable competitive advantage, or a wide moat as we've discussed, you can often afford to bet big. The key is discernment and due diligence. Now, you might wonder how to spot these proverbial wide moat companies that Munger and Buffett so often champion. Look for businesses with a strong brand identity, an unshakable market position, pricing power, and a consistent record of innovation. These firms often have a track record of bouncing back, even when market conditions are less than favorable. Let's consider Apple as an example. It's a company with an ecosystem so sticky and products so desired that even during economic downturns, its customers remain loyal. It's not just about having a strong product. It's about creating an environment where leaving the ecosystem is more trouble than it's worth. That's a moat of customer loyalty and integration. In our own investment journey, we must be keen students of the market, always learning, always questioning. It's not enough to follow trends. We must understand the fundamentals that drive them. This is where Investing Path becomes more than just a channel. It's a learning hub for those who seek to understand the why behind the what. While we delve into these investment strategies, we must also acknowledge the role of technology in reshaping industries. Munger, despite his traditional investment style, recognizes that innovation is a potent force. We've seen once dominant industries upended by the advent of the digital age. Think about the transformation within the retail space with the rise of e-commerce giants like Amazon. As we adapt Munger's principles to the modern era, it's critical to maintain a balanced perspective on technology investments. While some tech stocks have soared to high valuations, others may present opportunities if they have solid business models and strong moats. Think cloud computing platforms or cybersecurity firms that provide essential services. Munger's investment ethos, built upon the bedrock of value investing, reminds us that fundamentals, like earnings, management quality, and competitive advantages, should drive our investment choices. In a recession, the market's pendulum swings between fear and greed, can lead to mispricings. Astute investors, armed with research and rationality, can capitalize on these discrepancies. In this context, let's also highlight the significance of environmental, social, and governance (ESG) factors in today's investment decisions. Munger may not have spoken extensively about ESG, but there's no denying its growing impact on investment strategies. Investors are increasingly recognizing that companies with sustainable practices may have better long-term prospects. Thus, integrating ESG considerations can align with Munger's principles of investing in companies with long-term viability. As our episode draws to a close, let's encapsulate Munger's timeless wisdom. Invest with discipline, focus on quality, be patient, and always keep learning. These tenets are the guiding stars that will help us navigate the economic uncertainty that lies ahead. And so, fellow investors, whether you're a seasoned market navigator or setting sail for the first time, the path to investment success is a marathon, not a sprint. Equip yourself with the knowledge, temper your decisions with rationality, and align your portfolio with enduring principles. Remember to share this video with those who embark on their investment journey and like, subscribe, and hit the bell icon to stay updated with Investing Path. Together, we chart a course to financial prosperity, guided by the lighthouse of investment wisdom in a sea of economic uncertainty. Thank you for watching, and until next time, keep investing smartly.